Happy Friday, everyone, and welcome to a Courage Pays Better Than Fear market recap. And what I wanted to spend some time looking at today is just updating where we are with the SPX in terms of price action. And whenever I'm looking at the broader markets to get a feel for things and where we're headed and what the most likely path is, I always look at the SPX. So if you watch my shorts on YouTube, or if you see my longer form content, you could see that I'm always talking about the SPX. A lot of people look at the NASDAQ, the Dow Jones, or even SPY. They look at the ETF. I always look at SPX. That's just my approach. But what I wanted to do today is just take a look at where we currently are and discuss what are some of the possibilities here moving forward now that we're in earnings season and we're going to have the big boys of tech start to report next week following big banks. And it's been tumultuous here lately. And so let's just get an idea of where we potentially can go. And let's check out the charts. So here is my SPX daily chart. And you can see I have a ton of lines on here for good reason. And I'll talk to you about what all these are. But just taking a look at where we currently are. Again, the markets are closed today, being that it's Friday. It's Good Friday. So happy Good Friday. Happy Easter to everyone. I hope you all have a great holiday weekend. But you can see yesterday we did close up plus 6.98 points on the SPX. And we were an inside day. And one thing I've been pointing out is after that big, massive move higher that we've had off of the 90-day pause on this candle, you can see that every day thereafter, 1, 2, 3, 4, 5, 6, all 6 of those candles price action has been within the wicks and body of that massive candle. So we've essentially been inside. And if we look here at the past 4 days, you can see that we had an inside candle here. So an inside candle Tuesday that was inside of Monday's candle. And then we came lower. And then on Thursday, we had an inside candle that was inside of Wednesday's candle. So are we going to come lower? And so we could see that we made this low here. And if we measure this out from the all-time highs on February 19th, again, this is not going to be perfectly exact, but you can see we came down 21.3%, right? So there's still a ways to go in this bear market to go lower. And you have analysts calling for 30, 35, 40, some even saying 50%. But after we hit that low, you could see that we nearly touched the 2022 all-time highs. And there we found a bounce and pushed higher. Now, like I said, we've just been moving sideways. It's been kind of choppy. We did have a 100-point down day whenever Jerome Powell spoke this week. That was on Wednesday. But it's been kind of a quiet week in relation to what has happened and all the craziness of the previous weeks. But if we just take a look at what type of support is below us, we see that we do have that 100 SMA on the weekly here. So we want to watch and see if we come down there, if we find a bounce. We did fill this gap from May 2nd, 2024. So I'm actually going to remove that since that has been filled. We have the 20% correction territory that we could come back down to. Maybe we'll find support there. And then there's right below that, the 2022 all-time high. So we have 3 key areas that we want to watch for supports. And then if I zoom out here, I do have this trend line that I drew that goes back to 2020. So the COVID crash. And you can see that the SPX has found support at this trend line for quite some time. So it's been almost 5 years. And you can see that that's where we bounced here when we hit the recent low. So if we take those out, then we could just looking at other supports that are there. We have that 200 SMA on the weekly. We have a 50 SMA on the monthly. Those would be pretty strong. That would bring us down to the 4600s. And if we would crush through that, and that would probably be something event driven that would happen that really makes your moving averages paper thin. Again, keep that in mind. If something crazy, significant happens in the world, globally, in the US, the moving averages can get taken out like nothing. So if something like that were to happen, some type of geopolitical issue, some type of new crazy tariff that came out, then you would see these moving averages get taken out swiftly, right? So if we were to take out that 200 SMA on the weekly and the 50 on the monthly, then 30% would be on the table. And what I have marked here, I have marked out this 4,200 spot as a potential bottom, because if you think back to 2023, when this most recent bull run began, 4,200 was a price area that it took quite a while for bulls to reclaim. And it was heavily discussed like, all right, when are we going to hit 4,200? And eventually it broke through it, came back down, retested it, and then went on its run. And I could show you that here on the charts. So this was 2023. You could see that it tried to test that area, rejected, came back up and chopped below it for quite some time. And then once it broke out, it retested back down slightly below that 4,200, and then it began its run. So I think this is a significant price area where bulls jumped in and started that massive push higher that we got. So if we do come down below all of those moving averages, this is the price area that I'm watching, that 4,200, to be a potential bottom. Now, I'm not saying that we're going to get down there. Who knows? Maybe the low is already in. There's no way of knowing that. But this is an area that I will watch if we do hit 4,200 to see if there's a uptick out of there. Now, should we take that out? You have the 100 SMA on the monthly down at 37.71. Again, that's a long ways off. That's not even 40%. And just to show you how far 50% is, we'd be down in the low 3,000s, and that's above that 200 SMA on the monthly. So long ways to go to hit those levels. And not to say that we can't, but things would have to really get treacherous if that were to happen. And just to show you guys too, the last time we were down around that 200 SMA in the monthly was the COVID crash. So it does show you that it can happen. We'll see if that's going to be on the table for us now. The last thing that I wanted to show is we often talk about drops in terms of percentages, and I talked about this being a 21% drop. But I also want to show points wise. So this low that we made is 1,320 points, right? Now, check this out. If we go back to the 2022 bear market and we measure this in terms of points, it's a higher percentage, 27%, but we could see that the points dropped 1,344. So I thought that was interesting that we are near the total amount of points dropped on the SPX right now in comparison to what we did in 2022. Now, obviously, percentages change as things increase, and we've increased significantly on the SPX. That's a little different, but I did want to point that out. So that's the support levels in terms of the bear case. Now, what about the bull case? Well, if we're going to move higher here, we could see that this 20 EMA right here, this red line, has been serving as a bit of a resistance, starting with that big massive candle we got off that 90-day rest. So that would be the first resistance that would have to get taken out. And then above that, we do have some space from that 20 back up to the 50 EMA at 5,600. And that would be your next point of resistance. And then above that, you can see we just start looking at these different moving averages. Now, exponential moving averages are not going to be as strong as simple moving averages, okay? And so these thinner lines are your EMAs. The real significant resistances are going to come up here at the 50 SMA. That's at 5,700 if we can get back there. So you want to see how it would respond in that area. And then you could just see from there, you have the 200 and then you have the 100. The most recent significant bounce that we got, and this was from March 13th up until March 25th, you can see that it got rejected at that 200. So that would be a key area to watch. If it does somehow climb back up here, it gets a push, what does it do at the 200? Does it get rejected again? Does it come back down? And then you can see here, it's the 100 above that, and then we'd be up near all-time high. So you can clearly see the resistance that is ahead of it and above it that it's going to have to fight through. It's kind of sandwiched in between the support and resistance. And so that's what we just have to watch to see, okay, what happens? Now, in order for it to start reclaiming these levels, there's going to need to be some type of resolution or agreements occurring between the US and Canada, Mexico, China. That's the only way that we're going to see things push. Because earnings, as we're hearing the call, CEOs talk, they're uncertain about how the tariffs are going to impact their bottom line, but they're acknowledging that it's going to. So that's what it's going to have to take. This is a economic policy induced bear market that we're in right now. So it's event driven. And until there's some resolution, there looks like there's greater weakness to go to the downside. So just keep an eye on those levels. I wanted to update you guys with that. Let me know your thoughts. Where do you see us headed? I think we're going to come down lower and at least retest this the 20% drop in these 2022 all-time highs. And then the next logical spot, just looking at these moving averages, is coming down to that 200 SMA on the weekly or the 50 SMA on the monthly and getting a bounce out of there. So let me know your thoughts in the comments below. Where do you see us heading on the SPX? Make sure that you subscribe. I'm pushing to 500 and then the ultimate goal to 1,000. I appreciate all of your support and have an amazing weekend and make it a great day. Take care, everyone.